Hello, everybody. We are starting an interesting week, and that is why we are looking at the currency markets and wondering what kind of an impact we can notice till Friday. That is why I am speaking with David Jones, Chief Market Strategist from Capital.com. Hello, David.
Hi, hello.
David, tomorrow we will have Chinese trade balance data. The forecast is located in the area 410 billions. Do you think there is a possible to beat the June reading on 443 billions, which was, by the way, best trade balance reading since years?
I think it is definitely possible. You know, if we look, China, like the rest of the world, does seem to have recovered reasonably better than expected. Chinese stock market's been doing very well in recent weeks, I think, with, again, expectations there that it's coming out of the pandemic and things are getting back to a new normal there. So I think if we're looking for surprises, we should perhaps expect a positive surprise, I think, when it comes to this Chinese trade data. If we got that, you would expect it to lift both Asian stock markets and later on in the day, European and US stock markets as well. So that data, I think it comes out 4 a.m. UK time in the morning. So that's going to be really closely watched though by loads of traders around the world.
Great Britain. Tomorrow we will know monthly gross domestic product. Forecast is 5% compared to the last reading at minus 20.4%, and is looking good. But if we look at the goods trade balance and index of services, we cannot be that optimistic. So what's your view on this data?
It's a really mixed picture in the UK, and I'm sure it's similar in other countries around the world, but clearly that's the one I see every day. You know, we are, as you say, we are expecting obviously a bounce back because the economy was, you know, virtually all shut down last month round. We are seeing again things getting back to a new normal here, but we still have in the UK the government still paying, helping to pay salaries of people who are furloughed, who aren't working. The government has now got something of a big push encouraging people to go back to work if they can do. So I don't think tomorrow's number is going to have that much of an impact, but it will be interesting if it does beat the forecast or if it's massively different than the forecast. I think that will be the interesting thing to watch, but we're only now at the stage of the UK economy really starting to pick up after being shut down clearly for so long. So it'll be an interesting number to watch, but I think probably the more interesting numbers are still to come, and they will be after the summer when you would hope the economy was more back to normal by then.
Tuesday is also the day of CPI data from United States. Monthly CPI forecast is 0.6% and core CPI is 0.1%. So what's your view on cable, JBP USD?
I think cable's done well over the last week or so. We've seen it recover. We've seen the US dollar continue to be under a little bit of pressure, so that's definitely lifted cable. So I think for the pound, GBP USD, for the rest of this week, I think it's got further to go on the upside. You know, I think we still have some strength there. These inflation numbers, the CPI data out of the US, probably not too many surprises coming out of that one. Again, I think these numbers might look quite different in 3 or 4 months' time when we see the effect of you know, the intervention by the central banks. But for now, I think people are maybe moving away from the dollar, moving to more riskier assets like the pound. So for me, we are still seeing people buying the pound against the dollar on any weakness. So I think over the next week, this week, that's an interesting market to watch and to see if it can continue to push higher.
Looking still at the United Kingdom, what's your view on FTSE?
The FTSE is a bit of a strange stock market. The FTSE, you know, if you look at the US market, look at the Nasdaq. The Nasdaq is still making fresh all-time highs. The S&P 500 is up in the overnight market, so we're seeing still strength in US markets, the broad indices like the Dow and the S&P. The FTSE is always a strange one because so many of the FTSE 100 companies, the companies that make up this index, derive their earnings from overseas. So they make money in US dollars, let's say. So the FTSE is also affected by what's going on with the pound. So I think because we've seen the pound reasonably strong over the last week, 10 days, we are seeing the FTSE dragged up by US stock markets, but it's also being held back a little bit by what we're seeing going on with the pound. So I think if we see further pound weakness this week, we could still see further gains in the FTSE, particularly if we see global stock markets continue to lift. But the FTSE has underperformed lots of other stock markets over the last 2 or 3 months. So it's still positive, but it is tied to what's happening with the pound. If we had a weaker pound, that would help the FTSE. But if we have a stronger pound this week, I think it could hold the FTSE back. But overall, like other stock markets, it's still positive and still recovering off those lows in March.
On Wednesday, there will be monetary policy statement presenting by Bank of Japan. And what's your view on yen?
Well, I had a quick look actually at the dollar-yen chart just before I came on, because I tend to look at the European markets, the European FX markets. But the dollar-yen's an interesting one. You know, if we looked at euro, dollar, and pound against dollar, I was talking about US dollar weakness. But if you look at a dollar-yen over the last 24 hours or so, towards the end of last week, we did see a bit of buyers coming in for the US dollar. So perhaps if there's a market where this week we will see some dollar strength, I think dollar-yen could well be the one to watch. It's back on some old support down here, so perhaps over the next 5 days we'll see the dollar slightly lifted and the yen under some pressure. And I think it's one of the rare markets at the moment where in the short term it looks like there could be some US dollar upside with the yen under some pressure.
On the same day, there will be the Bank of Canada rate statement. Do you think that 0.25% is enough looking at the financial rate, or maybe there will be some dovish action?
I think it's interesting with all central banks at the moment because they did act clearly very quickly in cutting rates. All central banks, most central banks did the same. But I suppose at 0.25, you can argue that at least if there is a second wave of the virus or some other economic problem further down the line, the Bank of Canada still has some leeway to do something, you know, so without going to negative rates. So I think 0.25, you know, we're not expecting any changes to this, and I think for now it's probably the sensible thing to do, just in case things get worse, and then at least they have something else in their armory. But no surprises expected from the Bank of Canada this week.
And looking at the Eurozone, on Thursday there will be a Euro main refinancing rate. Now we are on 0.0%, and my question to you is, what to expect from that? Do you think that maybe we will go below zero once again, or maybe the central bankers will presenting some new actions?
I think when it comes to the interest rate, that they'll stay, I think, at where they are now, because I think if they move to negative rates, it would send out the wrong signal to financial markets. But maybe we see some more in terms of economic stimulation. You know, we've seen plenty of QE, for example, in Europe and other regions around the world. So perhaps we see something designed to stimulate the economy. Although I think again at the moment, because we're just coming out and the economies are starting to open up, perhaps the sensible thing here is to wait at least another month and see how things look in a month's time before doing anything. So again, I think we shouldn't be surprised if there is inaction by central banks this month, and then maybe we all have a better picture of what economies look like when we're into August.
Thursday is also the day of retail sales in the United States. Do you think the euro dollar will beat 1.1370?
It's going to be interesting, isn't it? Because this is going to be a really closely watched number. I think last time round it did beat expectations. So I think it'll be interesting to see what retail sales look like in the US. I think if we get a strong number, I'd expect it to put some pressure on the US dollar again, because again, it would suggest the economy is recovering quicker than expected. So again, it will make riskier assets like the euro more attractive. And I think we could see that 113.70 level broken if we do get a better than expected number. But I think along with the China data you mentioned coming out on Tuesday morning, I think this retail sales data is a really key one to watch this week.
So looking forward at the next week, at this week, and of course the next week, it's a very interesting weeks, especially on the currency markets. Thank you, David, very much for this conversation. Thank you for your analysis. My guest and yours was David Jones, Chief Market Strategist from Capital.com.
Thank you very much.